Today, we're breaking down the dangerous obsession with scaling, why profitability is misunderstood, what smart entrepreneurs focus on first, and how to know when you're ready to scale. If you're building a business or planning to, this video could save you years of frustration. Section 1. The Scaling Illusion. Social media glorifies scale. 10x your revenue. Blitz scale. Dominate your market. But here's the truth. Scaling magnifies everything. If your business model is weak, scaling multiplies losses. If your systems are broken, scaling creates chaos. If your margins are thin, scaling kills cash flow. Look at companies like WeWork, scaled aggressively before unit economics made sense. Uber grew massively but struggled with profitability for years. Amazon, often misunderstood, but strategically delayed profits with deliberate capital planning. The difference? Intentional strategy. Some scaled recklessly. Others scaled with infrastructure. Big revenue does not equal strong business. Section 2. What profitability really means. Profitability is not just making money. It means positive cash flow, sustainable margins, predictable operations, control over customer acquisition cost, operational efficiency. Smart entrepreneurs prioritize unit economics, customer lifetime value, cost structure discipline, repeatable sales processes. If you cannot generate $1 profit predictably, why are you trying to generate $10 million revenue? Profitability proves your product works, your pricing works, your market wants it, your operations can deliver it. Scaling is a multiplier, profitability is validation. Section 3. The Business Lifecycle Reality. Early stage priorities, whereas product market fit, plus unit profitability. Growth stage, priorities, whereas systemizing delivery, plus stable margins. Scale stage, priorities, whereas capital allocation, whereas operational leverage. Here's the mistake. Entrepreneurs try to jump from stage 1 to stage 3. They confuse revenue growth with business maturity. Revenue is vanity. Profit is sanity. Cash flow is survival. Section 4. When scaling does make sense. Now let's be clear. Sometimes scaling first is strategic. For example, marketplace platforms, network effect businesses, venture-backed tech companies, land-grab industries. Companies like Facebook scaled aggressively to dominate user acquisition before monetization. But here's the key. They had capital structure to support losses. If you don't have institutional funding, scaling without profit is gambling. Ask yourself, do I have strong gross margins, predictable conversion metrics, retention proof, operational capacity, working capital runway? If not, scaling increases risk exponentially. Section 5. Strategic Thinking Framework. Here's the framework smart entrepreneurs use. Step 1. Validate demand. Step 2. Achieve consistent unit profitability. Step 3. Optimize operations. Step 4. Strengthen cash reserves. Step 5. Scale with control. Scaling should feel boring. If scaling feels exciting and chaotic, you're probably not ready. Real scale looks like standardized processes, delegated leadership, data dashboards, forecastable revenue, tight financial controls. Section 6. Why founders get this wrong. Because ego loves revenue. Revenue creates headlines. Revenue creates press. Revenue creates social proof. Profit creates freedom. Many entrepreneurs are unknowingly building high-stress jobs, cash-hungry machines, businesses that depend entirely on them. And when market conditions shift, thin-margin companies collapse first. We saw this during economic tightening cycles. Cash flow discipline separates survivors from casualties. Section 7. The Smart Entrepreneur Mindset. The smartest founders think like investors. They ask, what is my return on invested capital? What is my margin structure? What risk am I taking per dollar of growth? Can this business survive a downturn? They optimize for durability, not applause. Section 8. Practical Action Plan. If you're building right now, here's what to do this quarter. Calculate your true gross margin. Identify your most profitable customer segment. Cut low-margin revenue streams. Build a 6-month cash reserve. Document your core processes. Then, and only then, increase acquisition spend. Closing. The hard truth. Scaling is sexy. Profitability is disciplined. One feeds the ego. The other feeds longevity. If you want to build something that lasts 10 to 20 years, prioritize profit first, scale second, and when you do scale, do it strategically.